Welcome to Better Than We Found It, the podcast for leaders driven to leave a positive mark through their leadership.
I hope that I will have created some ways in which the circumstances of your birth don't predict the opportunities you have in your life.
I'm Josh Huggins, your host and the founder of GS2 Partnership, a search firm committed to connecting visionaries dedicated to environmental and social betterment.
I have two young sons. I want to be able to tell them I did use the resources and expertise of a company to try to create more awareness about climate change.
In each episode, we delve into the minds of executive and future leaders. We discuss how sustainability guides responsible leadership, sparks change, and drives value.
The way of thinking I try and advocate is for us all to think about us having a collective problem to fix, which is climate, and that we need to rebuild our global economy.
We are GS2, and we are on a critical journey to connect to those who believe in leaving the world better than we found it. So hello everybody, and welcome back to another episode of Better Than We Found It, the purpose-driven podcast focused on engaging with executives who hold sustainability to their core alongside value creation. I'm delighted today to be joined by Dan Wells from Foresight Group. So thank you very much for coming, Dan. It'll be great if you could give a bit of an overview of yourself, I suppose your current role and remit, and also Foresight Group for those who, for some reason, don't know who you are.
Yes, absolutely, Josh. I'm delighted to be with you today. So just to give everyone a bit of background on Foresight Group, we are a sustainability-led investment management firm. We manage around £12 billion of assets in three areas: in infrastructure, in private equity, and in listed equities. And when we say we're sustainability-led, what we mean by that is that we set our investment programs and strategies in the long-term trends, in the context of the long-term trends shaping society and shaping the planet. And that means that the key investment themes we invest around are things like the energy transition, which is core to this kind of broader sustainability transition, and natural capital and biodiversity. So investing in restoration of forests and soils, and in future, hopefully things like oceans as well. And in terms of my own role there, I've been with Foresight now for a little over 11 years. I'm a partner in the infrastructure team. Infrastructure team is about 80% of our AUM. Over the time I've been at Foresight, I've managed a number of our renewable energy strategies. I helped set up our sustainable land and food team several years ago as we started moving into investments in that space. But my main focus for the last 5 or 6 years has been co-managing our flagship energy transition fund, which is called Foresight Energy Infrastructure Partners, or FEAP, and that is a fund that invests in low carbon energy infrastructure with a wide mandate. So not just renewable energy generation assets, but also enabling assets, things like energy storage and grid assets. So that's my background, and sustainability is very much a North Star, which kind of guides us in everything we do in terms of making hopefully good long-term investments.
Excellent. Well, thank you so much for the comprehensive overview, and I'm really keen to dive into some of those areas later in the discussion. But I suppose I want to rewind all the way back to the beginning, because in interviewing leaders like yourself who have purpose at their core, I suppose the origination story and understanding where it came from is something that's quite interesting to me. So tell me, if we go back, tell me about your earlier years and exposure. I know we've spoken on our pre-call about the exposure to climate and nature in your schooling. So perhaps you could go there and paint a bit of a story for us.
Yeah, absolutely. I guess the kind of the seeds of my sort of later passion for sustainability probably were sowed, back in the very early days, as someone whose childhood mostly took place back in the 1980s. That's when climate change was first starting to emerge in the kind of public consciousness. Although I wasn't really too aware of that. I think I remember being taught about the greenhouse effect at school, and as it was more called, kind of global warming at the time. I remember in geography lessons learning about the fact that things like coal were a finite resource as well. So at some point we were going to have to transition away from them. But I was also fortunate to grow up in a family where we did spend a lot of time on holidays in the great outdoors, going to places like the Lake District and Scotland, and further afield outside the UK as well. So I certainly have always had a passion for the outdoors and for nature. But I don't recall thinking at the time that I was going to have a career in sustainability. That came about a bit later in life.
Yeah, well, I think sort of probably back then it wasn't deemed a career, or there was probably not a career to aspire to be within. And actually, in interviewing individuals as part of the podcast, but also interviewing individuals in my day-to-day job of recruiting for sustainability professionals, I find the career path that individuals take to get to be in the role that they're in fascinating, because it's not a well-trodden path. You know, it's something that's emerged in the last 10, 15 years, and particularly in the last 2 to 3 years has gained momentum. So unlike traditional finance or marketing or other areas that, you know, you can follow quite a defined program, I think sustainability has individuals with very weird and wonderful journeys to that point. So keen to hear more about yours today. You finished school and university, and then I think, if I recall, that your first role was in EY. Was that correct? And if it was, could you tell us about your original remit there and what the plan was at that time?
Yes, absolutely. So yeah, I started my career back in the year 2000 working at EY. I had studied history at university, and one of the great things about studying in the UK is that you can go and work in finance even if you haven't got a background in finance. And in fact, as part of the history I was studying at university, there was some environmental history in there, which I found particularly interesting. But no, my first job at EY was working in conventional finance. I was doing very much the kind of standard route of chartered accountancy. So I spent 3 years getting my chartered accountancy qualification. And so it was only later on that sustainability made its way into my life.
Sure, understand. 7 or so years at EY, progressing through. What was the progression pathway for you? And I suppose at that time, what were you thinking your career or aspirations were looking like?
Yeah, absolutely. I had the first 3 years doing my qualification, and what happens is once you've qualified as a chartered accountant, that's a bit of a moment to think about what to do, and there's quite a big kind of outflow of people leaving firms at that point to go and work in practice or whatever it might be. I took a slightly random step at that point, which was to go and work in advertising. I had a particular view about what I might do in kind of finance within advertising, and that turned out to be a big mistake, in that I realized on day one in my new job that it wasn't quite right for me for various reasons. And I think probably sort of central to that was a feeling that working in conventional marketing of products was just not something I wanted to dedicate my entire career to. I've probably had a kind of gnawing feeling that I wanted something with a bit more purpose at the time. So that moment, which was a difficult moment, it gave me the space and time to think about what I wanted to do more, at a slightly deeper level. And after some sort of casting around and thinking and actually researching things a bit more systematically, I ended up going back to EY to continue working in finance, but specifically moving into sustainable finance. And EY agreed to sponsor me through a part-time degree in sustainability, which is a fantastic thing to do. So whilst I was working in finance, sort of outside work, I was learning about all of the kind of underlying basics of sustainability. What drives the climate, how companies have an impact on the environment, and how the kind of technical side of things like environmental audit works, but also on a kind of bigger picture, how systems work, so how the global climate system works, how the global financial system works, how the two kind of interact. And that allowed me to start then helping to contribute to the nascent clean energy sustainable finance practice at EY at the time, which is kind of building. And like many big organizations at the time, it was something that was just starting to emerge on their radar as something probably big for the future at the time. The majority of the work was around advising governments and corporations on investments into what was called alternative energy at the time, which basically meant wind and solar power. Actually, EY has a leading renewable energy advisory team, and does to this day. It has very good presence in the market, and that goes right back to the dawn of the industry, way before even I was there. In fact, there was a team based out of the Exeter office who sort of built a practice around advising around the wind industry in particular in those early years. And so I was working I was in the corporate finance team there, so I was doing corporate finance work and project finance advice for both energy companies, so some of the oil and gas firms who are starting to move into this area, firms looking to invest into renewable energy projects. Did some work in the nuclear industry as well, looking at what was meant to be then a kind of a nuclear renaissance back in the early 2000s. And actually working with the UK chairman at the time to start building kind of service lines for EY, which was sort of configured around a more kind of centralized approach to providing these services. But I think because sustainability is one of these things that is so ubiquitous, it actually creates challenges for how you kind of structure your services, because it hits everything everything that happens in the economy. So that was really my career progression, and like you say, I was there for 7 years in total. So it was another 4 years after I started the journey in sustainability, and I left in the year 2000. The year 2007. I mean.
Great. So just to rewind back to part of that, because I did miss that career mistake that you said, but perhaps actually, as I was reflecting and hearing it, you describe that back to me, it sounds as though, although it was perhaps a mistake, it was a bit of a catalyst for this change. And perhaps if you hadn't made that move, the move into the sustainable finance team may not have occurred, at least definitely not kind of straight away then. So just a couple of questions. Number one, you say you realized on your first day, what were some of the thoughts and feelings that you had on that first day? And number two, before you had taken the role, had you thought through those concerns that actually then came to be?
Yeah, well, taking the second question first, no, I definitely hadn't thought through those concerns. I was obviously a young person at the time, and I think I just had a feeling that moving into advertising would be a lot of fun, and you'd be working in a great kind of glamorous industry. I knew immediately it wasn't the thing for me, because I think I realized that being a finance person in the advertising kind of world is actually in some ways quite a difficult place, because you're in a cool kind of good fun place, but actually I was sort of put in a pokey broom cupboard at the back of the office and handed a large audit file and told to kind of get on with things. So I just realized there were actually particular components of that role that weren't right. I think you're entirely right though, Josh, that had I not been in that position, suddenly realizing that I had taken a job that wasn't right for me, and I was in an uncomfortable position, that kind of the pain of that realization was obviously a bit of a jolt. But it also meant that I knew that I had then some time to really think about things and think about why it was that I didn't feel right. So I think that kind of that sense, and as I was talking a minute ago about sort of being in marketing services as well, was something I realized I didn't really want to be in long term, just because I didn't really feel, for me personally, that was sufficient of a purpose to be just contributing to selling more cat food or whatever it might be. Had I not had that particular situation happen, had I just been ticking along, then I think I wouldn't have had that kind of that catalyst to make the change, and I could well have been sort of ticking along in a conventional finance role for much longer.
Yeah, I think that one of the things that I talk to people, especially aspiring leaders, about, and in particular when they have made a mistake, is I think sometimes people double down on the mistake and think, I have to see this through. I've made this commitment and I have to see it through. Others, perhaps not so much, but and it's a personal choice. But I think what I would like to highlight from your example is taking opportunities, whilst at the time might feel like a negative and might feel like a really big mistake, actually can present themselves better opportunities because of that. So I was talking with Ruth Hancock, who's the CEO of Octopus Money, on the podcast a a few episodes ago, and she was saying very much that essentially in her career at the beginning stages, she just said yes to everything, and it meant that there were things that she did that actually didn't work out, but then she just said yes to another opportunity, and that's what created the ability to take her on the journey. So I think there's something in that for some aspiring leaders that may be listening. So going back to the EY practice at this point, obviously we're talking sort of early 2000s. Whilst, as you say, this is something that had been beginning to be discussed, I suppose it's still in the grand scheme of things fairly early in the adoption from a corporate perspective. What resistance, I suppose, did you find with clients perhaps that you were supporting, or perhaps even internally at the firm level, perhaps there wasn't so much backing or support to this? So tell us a bit about what it was like to be in that, to be in the industry at that time, because I know it's moved on a lot since then, but it'd be good to paint a picture of what it was like back then.
Yeah, that's a very good question. So there wasn't a huge amount of what I would characterize as resistance from clients, kind of saying, "Oh no, we don't want to do this. You know, this is bad," or whatever. And I think there's a couple of reasons for that. In a way, there is more resistance these days actually than there was at the time. I think first of all, it was still something very new, and it's not something that was widely adopted in terms of just people being aware of sustainability or how you might change a business to sort of tilt it towards sustainability. There was also a lot of tailwinds in the space at the time, in terms of there was a lot of, there's a real feeling of positivity and momentum. If you go back in time, back to the early 1990s, and then sort of like look at how things have played out since then, things kind of move in these waves. There was an initial period of optimism, moving from the kind of the Rio conference in the early 1990s, when the UNFFC was set up and the COP process was set up, moving up to the first signing of the Kyoto Protocol, and then kind of moving forward to when the Kyoto Protocol was finally ratified in 2005. That's when people first started talking about carbon trading mechanisms. Now, bear in mind, at this time in the US, for example, there was more bipartisan support for it. So back in the 1990s, you had these with hindsight, extraordinary scenes of Republicans sitting down with Democrats and talking about climate together. And you can see a video of Nancy Pelosi and Newt Gingrich sitting on a sofa talking about climate together. So there was, in a way, more consensus then that something needed to be done, but it was still kind of much earlier days. So there wasn't really a pushback. It's just there wasn't a huge amount happening either. So really, what I was working on was these initial investments, or people exploring investments into, in particular, solar and wind power, which is great to see. And I would say that more the challenge at the time working in the service industry, an advisory firm, was more how you articulated to clients how that overall kind of piece looked like, because we had various pockets of people doing things. We had the renewable energy team doing advice on that. We had people advising more on early stage kind of clean technology, so kind of venture, for example. And then the emergence of advisory work around sustainability reporting as well, which is a whole different thing. So it was more about how things were kind of knitted together at the time, really, than pushing back on anything particularly big in terms of resistance.
Sure. And what was the comparison between? And I appreciate you weren't in those the other firms, the other big four firms, but were EY an early adopter to this in terms of the practice and the size of the teams in comparison to others, or did you feel as though it was similarly dispersed throughout the big four and other practices?
Yeah, so EY was definitely an early adopter of sustainability. Like I mentioned, the genesis there was really the renewable energy advisory team, and then the kind of the emergence subsequently of the sustainability reporting teams. I would imagine that at the same time that the other accounting practices would have also had the kind of genesis of where their service lines are around that. But certainly in the specific world of renewable energy, I think EY was probably a market leader there at the time, because it was such an early adopter.
Sure. So then you finished with EY and you moved to Singapore. Tell us about how that move came about. And secondly, the difference that you saw in the Asian market in comparison to the UK and Europe, and comparison similarities and such like.
Yeah, absolutely, Josh. So you were talking a minute ago about sort of giving yourself exposure to maybe challenging situations, and that's a good way of learning. So I had the opportunity to join a small team of people who had spun out of Nomura, the Japanese investment bank, and they were starting to build an investment management business called Syndicatum. So this is in the year 2007. I got to know the CEO there, Asad Razouk, who is a real leader in climate and has a very high profile. And the business model there was built around raising capital and investing it into clean energy and carbon reduction projects, as you say, in Asia. I actually spent most of 2007 and 2008 in the US raising capital. So I had my first exposure to the fundraising process from institutional investors. And we raised capital both into the business itself, so into the GP, as it were, the Syndicatum itself, the investment management firm. We raised capital from groups like Citigroup through their venture capital arm, through Black River, through AIG, the insurance firm. And we then raised an institutional fund to invest into these projects. And the capital there was primarily sourced from US foundations and endowments, so like university endowments, for example, and also some money from the Middle East as well. We were very lucky with timing. We had a first closing of the fund the weekend in September 2008 that Lehman's went down, actually, and I was in New York at the time, so that was an extraordinary experience to be in the middle of the global financial crisis and to see kind of what was happening there, and to be with much more experienced people who had obviously seen nothing like it over their long careers. So that was fascinating. Once the fund was raised, then I relocated to Asia. I moved over with my wife, and we built a life there in Singapore. We set up the fund management company and kind of built a team over there, and invested the fund into projects in China, in India, and across various countries in Southeast Asia. So in terms of the market itself, it is obviously, and it certainly was at the time, a very different place to be doing business. Just the way you do business is very different. Investing in clean energy, for example, in Europe is a fairly sort of systematic kind of machine. There are a certain number of advisors that work with the developers of projects. There are a certain number of investors. When a project is ready to be invested in, there'll be a process that the advisor will run. And it tends to be quite competitive. In Asia, certainly at the time, and obviously I've been out of Asia for quite a while now, business was much more built around personal connections. Trust was a very important part of it. So if you wanted to invest in a clean energy project in, say, Indonesia or Thailand, you had to spend a lot of time with the people who were developing that project, with the people that own the asset, to gain that personal trust. But again, it was a time when there was a lot of optimism in light of the Kyoto Protocol and it being ratified, in light of the international carbon mechanisms that were being built at the time. So we, Syndicatum, we were investing primarily in projects that qualified for what was called the Clean Development Mechanism. The CDM was one of the mechanisms set up by the UNFFC to essentially incentivize investment into Asia and other developing parts of the world, into projects that then generated credits that then could be monetized for a particular value. So it was a really, really exciting time. We then had to work through the kind of starting of the next phase of another financial crisis, which was the Eurozone crisis in the kind of early 2010s. That subsequently had a big knock-on on carbon markets in terms of basically crashing the price of carbon markets. So that was another pretty amazing experience to work through. But my time in Singapore came to an end in 2012 when my wife and I decided that we we wanted to move back to the UK purely for family reasons. We'd spent a bit of time overseas, and it'd been brilliant. We'd had the first two of our children over there, but we wanted to be back closer to our families, and so that's when I moved from Syndicatum and joined Foresight.
Sure. So a couple of things to pick out there for me within Syndicatum. So you were talking a lot, I suppose, about the positivity and the enthusiasm for what you were doing, but this is on the backdrop of the two global financial crises. So how did they impact and affect what you were doing, and I suppose internally how you had to sort of reassess and think about how you were describing or engaging with institutions or whoever to actually get behind what you were doing and showcase the value creation that was coming from this? Because I think it's much more accepted now, but perhaps back then there may have been more skepticism if I think it through. So yeah, tell us a bit about how it had to kind of shift your focus or the conversations you were having.
Yeah, absolutely. So what happened in the carbon markets mostly happened after I had left and moved back to the UK. So that's something I was kind of watching from, watching as I guess a sort of an outsider. So my time there was really focused on building the investment portfolio, investing in the projects in the first place. And I think probably people felt at the time that this was just a new area. So again, there wasn't really a huge amount of skepticism. There was, I think, a lot of interest and excitement as to how these mechanisms could really help build things for the future, could really help accelerate the sustainability transition. In 2008, there was almost a US federal cap and trade bill, the Waxman-Markey bill, which almost made its way through Congress, but didn't quite. And that would have been a real game changer at the time. And that sort of seems a bit unthinkable now, to think of a Congress approving something like that in the current political environment. So I think probably what I learnt coming through that was that even where you have mechanisms which have a lot of political will in the first place, is that these things, when they involve something as complex as carbon trading and international agreements, is that they need to have a really well thought structure that is resilient. And actually, if we kind of jump forward in time now, the European Emissions Trading Scheme, the ETS, is now structured in a very different way, which basically supports pricing and gives it resilience. And we're seeing now a carbon price that is really engendering real change. And we won't see the kind of the fluctuations or the risk of a crash that we did do previously. And really, what happened that time around when things did crash was that there just wasn't sufficient political will to keep things going, because at the time the EU was dealing things like the Greek crisis, so they had other kind of fish to fry. I think it also, that whole experience gave me some experience just from an investment standpoint in terms of how to think about different revenue streams and to appreciate that things like carbon, which essentially is a commodity, you need to think about the risk of that, and it's a different risk profile to other revenue streams. So there was definitely a lot of learning about how to structure investments and how to de-risk them.
Great. So, so when did you first hear about Foresight, and what was it that encouraged you to, in addition to move back to the UK, as you say, for family reasons, but then join Foresight as the firm at that time?
Yeah, so I knew of Foresight actually because Foresight was an investor in Syndicatum. So Foresight had made a small investment into Syndicatum from one of its venture funds some time before. So I was aware of the Foresight team because I was keeping them updated on the investment they had made into Syndicatum. So it was a logical step to go and work with them when I joined Foresight. So this is back in the year 2012. I actually timed it very badly because my wife left slightly earlier with the kids, but I had to stay on in Singapore to kind of work my notice, and I managed to miss the London Olympics as a result. So I came back, I think, at the end of August in 2012. But it was, that was also then another really exciting transition. I was joining team that was relatively small. So at the time, Foresight now is Foresight is a private equity and venture capital firm in its kind of DNA. So going back to its founding in the 1980s, it built a business around venture capital investing and private equity investing in the 1990s, and then during the 2000s, one of the founders of the firm, Bernard Fairman, started to become aware of some of the newer clean energy technologies that were emerging, in particular solar power. And he had a sense that this could be a disruptive force in the energy world, and that's obviously proved to be very much spot on as a prediction. So when I joined, Foresight probably had around maybe 35 employees. It managed a few $100 million, mostly in private equity strategies, so investing in kind of just regular companies, as it were, and had started to invest in two technologies, which was solar energy and also bioenergy. And that's a very different perspective to how we were today, but it was a different company at the time.
Sure. So yeah. So just to be clear, when back in it, the grounding of Foresight wasn't as an sustainably led investment firm; it was more a traditional investment firm. Is that right?
I think, yeah, that's right. But the continuity is essentially building investment themes by looking at these long-term trends shaping society. So when Bernard identified solar power as being something disruptive, that's a really good example of that. So at the time, he wasn't coming at it from a climate angle. He was coming at it from, well, let's just have a look at what are the technologies that are going to make a difference, what will be disruptive, and that's how he formed a view that, because in particular of the kind of Moore's law type cost declines that we might see in solar, which again obviously proved to be the case, that it would have really big implications for the energy system and therefore create investment opportunities. So I think obviously the firm has evolved, and as sustainability has become much more understood and accepted, and as the whole concept of investing in net zero has emerged, so moving away from just investing in purely renewable energy to actually decarbonising the entire economy. So we've grown as a firm, and now when we describe ourselves as being sustainability led, our investment strategies are being set within that kind of wider context of the need to tilt the arc of the world back towards a sustainable basis, but still at its core, it's about making good long-term investments, mindful of those big trends shaping society and shaping the planet.
Sure. So for those who don't know about Foresight, or I suppose exactly what you do, would you mind just giving an outline of the structure of the firm, divisions, the funds, the different layers to these, and where you sit within that?
Yeah, absolutely. So we are a partnership. We have always been a partnership. The big change that happened about 2.5 years ago is that we listed as a firm on the stock market. So we're listed on the main market of the LSE. Prior to that, we were entirely owned by the partners. When I joined, we were in a small office in Sevenoaks, overlooking the post office. We're now in the Shard, and I think we now have over 400 people in the firm. So it definitely feels very different in terms of us as an organisation. So I mentioned at the start that we manage about £12 billion worth of assets, and that's split across our three divisions. So we have a private equity team and a listed equities team. The private equity team invest in UK SMEs across the whole kind of industry spectrum, in particular based around regional investment strategies. So investing in businesses in particular areas of the country, in particular in businesses that help enhance the fabric of local communities. Our listed equities team manage a number of funds which are structured as open-ended investment companies, or OICs, and they invest into listed stocks of, in particular, infrastructure firms or funds, and they have, for some of their funds as well, they have sustainability thematics around that. Those two parts of the business, the private equity team and the listed equities team, represent around 20% of our AUM, and then the infrastructure team represents the other 80%, and that's where I sit. On the infrastructure side of the business, we manage primarily listed funds and private funds. So we have 3 listed funds, 2 listed energy funds, one which invests purely in solar, one which invests in a more diversified set of environmental and renewable energy sectors. And we also have a listed forestry fund. So those are our listed funds, and they have a particular objective, which is primarily around delivering an index-linked, robust dividend yield, and that's what they do, and they hit their targets, and they produce a good kind of de-risk cash flow for investors. On the private side, then, we have funds that are structured as what are called limited partnership funds, which are kind of structured as as most private equity funds are structured as LP GP funds. We have a number of limited partners, the investors, and then you have a general partner, the GP, who is the entity making the investment decisions. And our primary funds there are in Australia. We have three institutional funds that invest in energy assets, and in particular renewable energy. And then our flagship energy transition fund here in Europe is the fund that I co-manage along with another partner in the team, Richard Thompson. And that fund I mentioned at the start, Foresight Energy Infrastructure Partners, or FEIP, that has a specific allocation to invest in renewable energy generation, which is wind, solar, hydro, bioenergy, geothermal. The second basket is energy storage, both short duration storage for things like batteries, and then long duration storage. And then the third basket is grid infrastructure itself, so transmission and distribution assets or international interconnector cables. And the premise of that fund and that strategy is that there are benefits to investing across all of those sectors because of the complementarities that you get from that and the way you de-risk cash flows. That particular strategy is one where we're really pleased with the success of it. We're targeting a 500 million raise for our first fund. We ended up 70% oversubscribed at 850 million, and that fund is now getting towards being fully committed to investments. So we'll be looking to the next vintage in that fund strategy in the coming months and as we roll into next year. So that's a quick overview of what we do. But when we think about future investment strategies, and when I mentioned that the sustainability transition kind of sets our framework for investing, we kind of think about how that sustainability transition is built up over time and how we map our strategies to it. Going back in time, the first layer that was building up of the sustainability transition was renewable energy becoming a thing. So going back to when I was working at EY advising in wind and solar, and in that period, wind and solar went from being a kind of marginal technology to something that is now core to energy systems globally. We then moved into the kind of second layer of the sustainability transition, which was the more systemic energy transition, which is where, as energy systems became more deeply decarbonized, and we start to need things like energy storage, and we need to upgrade the grid entirely, we get all these other opportunities coming through. So that's where FEIP, the fund I mentioned, the private fund, fits in as an energy transition fund. It fits in this kind of second layer of the sustainability transition. And then as we look to the future, and as the sustainability transition moves beyond just energy and into decarbonisation of things like industry and land and agriculture and transport, that's where we see more opportunities, and in particular in areas like industrial decarbonisation, where we see the ability of hydrogen in particular to be a powerful decarbonising tool. So we're structuring strategies around that as well. So that's the way we kind of think about things through that kind of what we call the kind of 3 layers model of the sustainability transition.
Sure. And something that certainly I have been coming to know more about within Foresight is your focus in the future around nature and biodiversity. I understand or attended actually your one of your events at the Shards with the Eden Project and the partnership that you have with them. I think it'd be great to share perhaps some of those areas that the organisation is getting involved in, focusing on and really driving the agenda for, because a lot of individuals I talk to see and are starting to get involved in nature, but perhaps I suppose Foresight taking real steps to look at this. So could you talk a bit about what you're doing around nature and biodiversity in amongst your assets?
Yeah, absolutely, Josh. So whilst the energy transition we see as the kind of the key dynamic shaping this broad sustainability transition, the concept of natural capital or nature recovery is something that sits alongside that and is absolutely critical. So it's a key theme that we have been both investing into for some time. So when we set up that Sustainable Land and Food Group, that's when we started looking at things like regenerative agriculture and forestry, and the way that future forms of food production can alleviate the pressure that we're putting on the environment. But in addition to making investments in biodiversity, like you say, we look to restore nature and enhance biodiversity at all of our investments. We're really delighted with the partnership we have with the Eden project that you mentioned. That's something we entered into last year. We're now hosting also an annual sustainability forum at the Eden project itself, and we bring together leaders in sustainability from business and from government and from the academic world to talk about the big trends that investors need to be aware of. And the Nature Recovery Blueprint is something that we are building in conjunction with the team at Eden, which is essentially a manual that can be used for us or for other investors to restore and enhance biodiversity at all of their investment sites. And that includes things like investing in wildflower meadows, investing and promoting bee populations, and all sorts of things like that. So that's something we're very excited about, and we're excited that we're actually doing practical things rather than just talking about it.
For sure. And one of the other parts of Foresight that I've understood and I think sets you apart is the positioning of sustainability within the culture of the firm. And with a lot of individuals who approach me or us at GS2, who are perhaps in more traditional investment roles or other areas of financial services who want a sustainability focused position, the comments we always give back is actually, what are you doing within your firm to drive the culture of sustainability? Because there's only so many people who can have the specific sustainability roles, but actually it's something that needs to be embedded, and people need to be empowered to make decisions that have sustainability at its core. But I know that you've been working really hard to embed that into Foresight overall. Could you tell us a bit about how sustainability has been positioned and therefore the culture that you're creating and developing within the firm? Because I think it's something that's to be admired, and I think that best practice could be shared.
Yeah, I'm really glad you asked the question, Josh. I feel like one of the things I've learned about sustainability over the 2 decades or so I've been working in it is that sustainability is by nature both objective, something's either sustainable or it's not, and it's also multidimensional in terms of how you need to think about it. So when we think about what sustainability means for us as an organization, we need to think about our long-term viability. And that means obviously making good investments, because that's kind of core to what we do. But it also means that we need to think about the sustainability of ourselves, of our people. We need to think about the relationships we have with our investors and those kind of long-term partnerships that we build, which has to be built on credibility and trust. And that's why personally, I will always talk about sustainability and sustainable investing rather than us being an investment manager with an ESG policy. So ESG obviously being environmental, social, governance. For those who haven't heard the acronym, but I'm sure everyone these days has heard it. When I hear other firms talking about having an ESG policy, to me, that is very much sounding like it's something that is kind of stapled onto the side of what they do. As an investment management firm, it sounds like it's something that is there to almost sort of restrain investing, or to qualify it in some way. For us, obviously, sustainability helps us set the landscape for our investments. It helps us identify value. It helps us manage risk. But it's also a prism for us to think about how we are managing ourselves. And our HR team, which was renamed some time ago as the People and Sustainable Culture team, that's exactly what they do. And when we were going through COVID, for example, we were focusing a lot on the well-being of our people, of all of us. We were releasing our own podcast talking about how to kind of manage your own personal well-being during that time. So that's exactly why sustainability is such a useful reference for us. And it's why when we think about our business strategy, which is about making good long-term investments and us being a successful firm in the long term, sustainability is a key driver of our our business strategy. You might call it a sustainable business strategy, rather than it being something that we kind of tag on as an afterthought.
For sure. And this is the bit of around sustainability that I find so empowering, is when organizations really do embrace it and see it as the driver for value, rather than, as you say, having their business strategy and then having a separate sustainability strategy. The two need to coexist to get the benefit from it. And I know from firsthand in recruiting for Foresight that culture piece around sustainability is such an attractive proposition for individuals when they're considering other firms to join, that really that brings them in. So I think it's not only essential for to create value through the products and services that you deliver, but also when you think of it from a people perspective and attracting the best talent. I'm sure you read or saw the article that KPMG released, where they were talking about the growing percentage of individuals who would only join a firm when they consider their sustainability objectives and credentials. And I think it was something like between 25 or 30% of individuals voted that they would only move for a firm that took that seriously. And talent's a huge problem for a lot of firms of getting the right people in. And if that's where society's going, then of course, if you don't keep up with that, then by nature you will not be sustainable, because your business will become not viable. So I think it is multi-layered, but I definitely think that the journey that you guys at Foresight are on is something to be admired for sure. So we've spoken a lot, about the positive side of sustainability then. And I know I mentioned this to you before we spoke, but I recently read the article in the FT, which was proclaiming that ESG, and they did use the phrase ESG, is beyond redemption. And I think this pulls more into the political nature of what ESG is and how it's used. But what's your view on that, as a kind of a debate at the moment of whether this is a good thing or something that is not good for economies or whatever it may be. And when you get challenged on that, if you do anymore, how do you respond, and what's your viewpoint?
Yeah, it's a really good question. It's very topical right now. I think there's kind of two layers to first of all kind of explain as to what I think is going on with that question. The first point is quite a specific point, which is that I think a lot of the dialogue at the minute is specifically about ESG investing and kind of ESG investment strategies. And when you see headlines in the financial press about that and the kind of the backlash against ESG investing, what that is specifically referring to is really traditional equity investing, so investing in listed shares, where you're investing in funds that have been tagged with an ESG label. And the challenge there was that there has been a proliferation of funds investing in a huge wide range of stocks. In fact, probably most of the stocks on the stock market in some shape or form are fitting into ESG strategies. There are real challenges and problems with it, that some of the rating structures and rating firms and rating approaches are inconsistent in their approaches. So you will have examples where one company, which could be an energy company, will be scored very highly by one rating agent because it has some renewables in its portfolio, and very badly by another one because it has fossil fuels. So I can see why, in some respects, there is a legitimate and worthwhile kind of pushback on that concept, and there needs to be a bit of a retrenchment so that investors can see, genuinely what is something that is really positively contributing to the sustainability transition, and what is not, what's something that's just been hit with the label. But I want to really distinguish between that notion of ESG investing, and particularly probably where it has got a bit out of hand, which is investing in mostly kind of regular companies, where someone's decided to say this is a green one or this is not a green one. That's not the same as what needs to happen, or what is happening at a global level, which is massive mobilization of capital into rebuilding the world's economy, the world's infrastructure, with low or zero carbon infrastructure. And that is what needs to happen, and that is what's happening now. So the first point to make is I think there is a little bit of confusion there. So, I would not say that what I'm doing is ESG investing. I would say that we're investing in infrastructure and real assets that are supporting the sustainability transition. And we think very carefully about, what are the investments that have the biggest sustainability impact, and what helps accelerate the energy transition, what helps maximize the speed of decarbonisation. So that's the first layer of it. The second layer of it is that there is also a wider pushback against kind of green stuff more generally. We're seeing this in Europe. We've obviously seen it in the US for some time. It is the environment and climate is highly, highly politicized in the US, and probably it's getting more so here. And I always say, from a personal perspective, it's sad to see climate sort of emerging on the landscape of the culture wars to some degree as well. Now, part of this obviously is because what has happened over the last couple of years is that net zero has become a much bigger thing, which is a good thing. It's certainly in my view that we now have a much wider perspective on where decarbonisation needs to happen. But that's happened at the same time as the cost of living crisis. So therefore, it's very easy to frame the investment that is required into clean energy and other forms of low carbon infrastructure as being something that adds to cost. The message that really what we have right now as a society is, when we're building new things, whether it be new power plants or manufacturing plants, whatever it might be, is we have a choice between old, inefficient, carbon intensive technology that's been around for 100 plus years, or new, much more efficient and low carbon technologies and infrastructures. And it's kind of as simple as that. Something that is really fundamental, which has changed over the last few years, is that clean energy, and wind and solar power in particular, is now generally the cheapest form of energy. So wind and solar have the lowest levelized cost of electricity globally. In general, there's data from groups like Bloomberg New Energy Finance or BNEF that kind of set that out quite clearly. That's something that's happened over the last 2 years. Now, that has really profound implications because it means that, first of all, there is no longer this trade-off between investing in clean energy and investing and economic development. Clean energy is the best way for countries to develop. But it's also having cascade effects. We're still in the relatively early days of the energy transition. Now, the majority of new build energy generation is renewables. We kind of went through an inflection point probably back in 2015. By 2019, 2020, the vast majority of new build energy additions in the developed world were renewables. So that's kind of where we are now. But there has also these cascade effects that clean electricity is enabling decarbonisation of other areas. It's enabling decarbonisation of transport, obviously, through electric vehicles. It will enable decarbonisation of industry because green energy, green electricity enables you to make green hydrogen. Green hydrogen is a crucial technology for things like green steel in the future. So what's happening with clean energy is creating these kind of cascade effects, which will enable the building of a full kind of full green economy in the coming years and decades. So I guess the message I want to say, this is coming at it from the perspective of an investor, is that yes, we need to mobilize a lot of capital into this, but it is not a net cost. It's a net benefit to society. Clean energy tends to be cheaper in the long run, but it tends to have more upfront costs. So the challenge is in the financing. A really good articulation of the economic opportunity of net zero is actually, and this is just a personal view, the Mission Zero report that was authored by Chris Skidmore at the start of the year for the UK government. So Chris, being a member of government at the time and a sitting MP, I think that is a really fantastic articulation of exactly that point of the economic opportunities coming from net zero, but also the urgency from the perspective of the UK, for example, the need to act because this is something that is understood internationally, and this is something that China has been building its strategy around for many years now, and has made real progress in. It's in these market drivers. It has enabled the milestone legislation we've seen in the US, the Inflation Reduction Act, which is supercharging clean energy investing over there. It has enabled what we're seeing in Europe through the EU the Green Deal Industrial Plan, which in turn has given rise to this whole raft of legislation, such as the Net Zero Industry Act. So there's a lot happening very quickly, and it's good because it does need to happen. Right now, there is a movement to articulate this kind of pushback to anything green, based on this notion of cost. In my view, that's the wrong articulation of what the situation we have right now is. But there's lots of grounds for optimism, because notwithstanding that kind of that green backlash, things are happening very rapidly.
Well, thank you, and I think very well articulated the sides of the argument there. I won't push you any further on that, because I know we could probably start debating politics all day. But let's go back to the more positive side. So for you, if you were to sort of highlight the 2 or 3 most exciting or innovative areas that you see Foresight either investing in or expanding into, what would that look like over the next 2 to 3 years?
Yeah, so in terms of new areas, within energy, one of the areas we have that we focus on, I was talking earlier about sort of maximizing the sustainability impact of our investments. So obviously we invest in things like renewables. We also see this notion of kind of bottlenecks to the energy transition. So right now we need a lot more energy storage in the system. The grid itself is a real bottleneck, because there's now, because so much renewable energy is being built, there's a real backlog of connecting assets to the grid. We can decarbonize much more economically efficiently if we can connect grids as well. So if Europe could become more connected, we have more interconnection, that would greatly reduce the cost of decarbonisation. So one thing I'm really excited about is the work we're doing in investing into those areas. We've now, for example, from the FEEP fund, we've invested into 2 long duration energy storage projects. They're both pumped hydro projects. As we reach these deeper levels of decarbonisation, we need more than, say, 6 hours of duration, which is sort of at the minute the kind of limit of where batteries can reasonably provide power. So long duration energy storage, or LDES, is something that's not really known very well outside the energy world, but it's a really crucial technology for the energy transition. There was a study by Aurora, actually, which estimates that with some investment in LDES in the UK, that could reduce UK power sector emissions by 10 million tonnes by 2035, which will be about half of UK power sector emissions. So I'm really pleased, I'm really excited about what we're doing there. Outside energy, looking to the future, I think there will in the future be disruption in the way we produce our food, again in a positive way. So whether it be both sort of using traditional techniques and almost rehabilitating traditional techniques, so things like regenerative agriculture, or using new forms of infrastructure to produce food, so controlled environment food. What's really interesting is new technologies to artificially produce proteins from things such as technology called precision fermentation. You're using microbes to produce food. I think that in the future has the potential to create massive sustainability benefits and really help decarbonize because of the impact that food and agriculture, and in particular livestock and dairy, have on the climate system. So those are some of the areas that I'm really excited about looking to the future.
Excellent, thank you, and I appreciate that we're running out of time. So I'm really keen to ask you this final question, which is around the name of the podcast, which is Better Than We Found It, and really keen to understand from your perspective, Dan, by the end of your career, what you, I suppose, would like your legacy to be, to show that you've left the world better than you found it.
Yeah, well, it's a big question, that. I mean, I would like to think, hopefully, that by quietly kind of working away at these areas in terms of how we need to rebuild the world in a kind of physical sense, I'm making some contribution. I think we can all make a contribution to our own working environments and make them more sustainable just in the way we interact with others. But the way I would really, I guess, like to make an impact ultimately would be trying to help evolve the way we think about these problems, so changing the way we think to adapt to the world that we have in the 21st century. If we take climate as an example, the way of thinking I try and advocate is for us all to think about us having a collective problem to fix, which is climate, and that we need to rebuild our global economy, and to think of it in those terms as a system level problem that we can all contribute to. rather than it being essentially a moral issue, a kind of issue of holier than thou, of who's consuming less or more, and kind of finger pointing and trying to demonstrate that we're doing better than someone else, because ultimately no one of us can be sustainable on our own. I think we can all contribute more if we just quietly get on with it and figure out how we can help build something and take the judgment out of it, because together we can achieve a lot more.
Excellent. Collaboration is key. So yes, I agree with you there. Look, it's been fantastic to understand more about what you do, the breakdown of that, and I'm sure some of the listeners would be really keen to find out even more. Following the podcast, would you be happy to connect, engage with others, and if so, and if people wanted to reach out to pick your brains on something or share some ideas, what would be the best method for them to contact you if so?
Yeah, absolutely. We're really, really happy to talk about everything we've talked about, to engage with anyone who is interested in sustainability as a career, or how they might contribute. Please feel free to contact Foresight through our website. We have a good LinkedIn presence as well. Feel free to contact me via LinkedIn as well. You'll be able to find me by looking up Foresight Group. We're regularly posting things on what we're up to, and so always delighted to have conversations.
Wonderful. Excellent. Well, thank you so much, Dan. It's been an absolute pleasure. I hope you've enjoyed the conversation as much as I have, and look forward to hearing about these excellent, exciting areas that Foresight are moving into, and I'm sure you're going to make them a reality. So appreciate your time. Thank you for joining us, and I hope to catch up with you soon.
I really appreciate it too. Thank you, Josh, for your time today.
Cheers, Dan.
Thank you for joining us on this episode of Better Than We Found It. I hope you have found value from this to support your own purpose-led journey. This episode was brought to you by GS2 Partnership, my organisation focused on providing talent solutions for sustainably focused organisations. We are driven by our purpose of connecting the people who believe in leaving the world better than we found it. If you are looking for a partner to support you with your hiring plans, or you are looking for your own career next steps, please reach out to us or personally drop me a message on LinkedIn. It's great to hear from listeners to the podcast, and I'd welcome the opportunity to talk to you. Thank you very much, and stay tuned for our next episode.